of the biggest topics in the market at the moment is, the oversupply. As you know, there's many articles going around, people talking about fear of oversupply, people concerned about where the market is headed. So today we just wanted to take a look at the fact, all the figures, because as you know, Dubai Land Department offers an open source, and we have the privilege to look through such data and verify these claims. So Khalid, I want to know what's your opinion on what's going on.
Yeah, exactly. So definitely we read these reports, we see them every week, but we feel like these reports really don't show like the full picture, tell the whole story about what's really happening in the market. And that's why I felt like it's really important to tackle this subject and look into more the numbers and figures in more detail to see the truth of what's really happening. I feel like some of these reports, what they fail to take into account is the actual percentage of units that gets delivered out of the projected pipeline. So let's take an example. So on paper, you have in 2025, there is around 60,719 units that are due to be handed over.
Okay.
But how many units actually did get handed over in this year? The number is only 37,982. So you can see that this is actually the delivery rate for this year, at least, is 62.5% of the projected supply for the year. So it's always lagging behind the projected amount.
I believe this 37,000 number would also include the lagging handovers from the years before as well.
Of course, there's a lot of units within those numbers that were scheduled to be handed over last year, and they were handed over earlier in 2025. And this is exactly another thing that we have to look more deeper into, because again, the idea here is to tackle the fear of oversupply. Okay. So we need to first of all also understand in which parts of the market is the supply coming. Because if you dissect the numbers down and you look into more details, these 37 units are coming in which areas and in which segments, you might not be as concerned because you're simply not invested in these locations. So let's look at some of the figures within these 37,000 units that got delivered. Out of the 37,982 units that got delivered, only 4,169 were villas and townhouses.
Okay.
So again, this is almost 11% of the current delivery rate is villas and townhouses. So it remains to be still undersupplied. Around 33,813 units are apartments. But again, let's look at where these apartments are coming, for example. There are certain areas where there was zero deliveries of new apartments. So if you're invested in any of these areas, should you be worried by the current supply of 33,000 units that got delivered?
Definitely not.
I don't think so. So for example, do you know that there are zero new apartments delivered in Palm Jumeirah this year?
Interesting.
In Dubai Hills, there is only 322 units delivered. In Dubai Hills, there is zero apartments delivered this year in the ultra luxury segment, which still remains hugely undersupplied. There is zero grade A commercial units delivered in the main business districts. Again, so
while we're on the topic of commercial as well, we've seen, each area has its own rental index. The majority of areas now in Dubai, that index is going up by over 30% per year. So rents are increasing on every tenant by around 20% in the majority of these areas, whether it's commercial, retail. So really, the numbers do speak for that.
Exactly. And this is, I think, where clients need to learn. And this is what we're sharing today, really like the tools that everyone in the market has access to, whether it's clients, whether it's other real estate professionals as well, to educate themselves, educate their clients, and understand which areas would be affected by the current supply and which areas would be more resilient and are really not affected at all. And this is where we want to, add value and educate our clients and how to maneuver, this period as effectively as possible.
So the main topic behind these reports is the oversupply. This is the word that we see going around. So let's dive deeper into the supply. Let's look into the figures.
Yeah, like for example, I recently, just over the weekend, I read a report which projects that there's 48,000 units scheduled to be delivered in Q4 of this year, which is, it's impossible, because when you go on the Dubai Land Department website and you see how many units are actually delivered, how many are still in the pipeline, the remaining number is only 22,737 units, half of which are still below 80% construction progress.
So there's no way these will hand over this year.
Exactly. There's no way they would. And then also within, it's important to know, which segments are still also greatly undersupplied in the market. You have, for example, a segment like the ultra luxury segment. I don't think you should really put that into consideration when we talk and say there's 330,000 units in the pipeline due to be handed over in 2028. Why? Because this segment is hugely undersupplied. Today, if we sit together and calculate how many ultra luxury apartments are actually delivered ready today, the number is less than 1,100 units. This is it. But the demand is much higher than that. So there is still a lot more room for that segment to grow, and it could actually benefit of more supply in the future,
100%.
So,
and I think also with just around 10,000 multimillionaires moving in every single year, and with this number growing every single year, a lot of demand is on those 1,100 units. And I think this will go into something we'll discuss later, which is the growth of the off-plan market. Why are people choosing the off-plan market? It kind of links to the undersupply in this segment.
Exactly. Shortage of supply is because also the type of product that is being introduced in the market today is some of these projects never existed before in the past. So you're kind of today, people invest in off-plan because it's a new era for the market. If you invest on everything that's been built pre-COVID, that's a completely different era. The market was in a completely different, state back then, and there wasn't the demand for quality, luxury, exclusivity that you have today. And that's why a lot of people are opting for off-plan, because most of the projects, especially in that segment coming up today, is really hard to put a value at, because there's no ready equivalent that you could really match it to. So
I agree. I believe that was the case with many projects in the past as well, where the off-plan prices were considered high at that time, but there was no equivalent in the market. And we see them today with projects, as you mentioned, like Bulgari, the Four Seasons residences. These were all first of their kind projects in Dubai, and we're seeing more of that coming into the future for sure.
yeah, exactly. There's a reason why these two projects were two of the top performing projects in the market, is because of that element of scarcity, because of clients simply couldn't find that quality or lifestyle in anywhere else.
I agree.
So another factor that we need to consider is the amount of people coming into the country, the population increase.
Of course.
And it's a fact that we've increased by 208,000, I guess the figure is, for the year. Just October, November last month, we've added 17,669 new residents, which is a record for new residents in 1 month. So, and based on a government survey, that 70% of the new residents coming into the city are capable of purchasing a property.
It's very interesting.
Okay, so which is a very high figure. But still, even let's do an assumption based on that 70% of the 280,000 are able to buy a property, and then per each property, each household has 3 people. So then each 3 people will buy or live in one property. That brings the number down to 48,533 units, so which is still below the current supply of 37,982 units. And these numbers are projected to increase year after year. We're currently even ahead of schedule of reaching the population target of 5 million by 2030.
It's very interesting. And they also want to reach 6 million by 2040, so this is the rate they want to be growing the city.
Exactly. If already we achieve 200,000 every year over the next 5 years, that's 1 million. So we're on course to achieve the 5 million by 2030. And if we continue growing at this rate, even with the current rate of supply, I think it will be sustainable.
Now, what are the big differences that you would see in the market today compared to the market 15 years ago in terms of governance, in terms of regulations and legislation?
I think a big difference, especially after 2008, 2007, with the financial crisis, and there was a lot of laws that got implemented afterwards. Especially the most important one and off plan was the introduction of the escrow account. Now developers are required by law to open escrow accounts before they start selling their projects, and the prerequisites for that are very strict as well. So developers need to own the land outright. They cannot have any loans, any outstanding payments on the land, and they need to deposit 20% the value of the project in the escrow account before they can open it. So again, that's very good. And it gives clients the safety that you're kind of not really paying the developer, you're paying in an escrow account that belongs to your project, and the money can only be spent towards building that project. And the developer doesn't have full control over the funds. It's actually the government that controls it. So all this adds layers of security to the investors when buying off-plan.
And I believe this is just one small part of the infrastructure and the groundwork that the Dubai Land Department has been putting in, which has allowed for such a safe market. Even in the past, when we've seen the market go through corrections, I don't think that without such an infrastructure that the market would recover the way it has and as quickly as it has in the past.
Exactly, because you needed to help investors gain confidence, back in the market. And I think the government here, they did it really well.
I agree. So one thing we've been hearing a lot, obviously, in the market is, especially from people who've been around for a very long time, because they've lived through 2008 and so on. So do you think a crash, or for better use of word, a correction is imminent?
I don't think crash is the right word. I think maybe more of a soft landing is what we should be, bracing for, or maybe a market correction. And I think the demand is too strong at the moment for a crash to happen. But even if it does come in the form of a correction in terms of prices, I think that can be very healthy for the market, especially that I see a lot of people, or a large segment of the market today, they feel outpriced of the market today. And then a correction happening would present a buying opportunity for this segment, which is a large segment of the population. So I think a correction would actually serve as a, it would generate more demand into the market. And also, I think that investors and people learned from the past mistakes. How many people of your friends, for example, you see tell you, oh, I wish I bought in 2019 when the market dipped during COVID, or I wish I bought that. If I had bought that when the market crashed, I would have made, X amount of money. So at the next time the market does present such opportunity, I see that there is going to create a lot of demand. There's going to be a lot of buying opportunities for people to go in. And I expect that the recovery to come swiftly after as well, because simply today, the market is thriving on strong fundamentals. It's not only like a bubble or a hype. And what are the strong fundamentals? Is population increase. There's like physical demand. You see it everywhere. You see it in the traffic. You see it in the shopping malls when you go and buy something. You see it when you're trying to book a table in your favorite restaurant over the weekend and they tell you that it's fully booked in 3 weekends in advance. You see it in the government spending on infrastructure. It's at an all-time high. I don't think the city has ever spent that much on infrastructure as they are today. There's literally an expansion on every major highway, an expansion to the metro line, the Ittihad Rail, which is going to connect the 7 Emirates, take you from Dubai to Abu Dhabi in less than 45 minutes, $12 billion on the new Al Maktoum International Airport, and so on and so on. So I think if you look at all these fundamentals together, you really can feel the strength of the market,
100%. I think this collection of fundamentals that are supporting the market is what's gravitating lots of people from around the world. Like a lot of people's wealth is at risk, particularly in Europe and in America. And what better asset class than real estate, and what better market than the UAE today?
This is another thing really that gives me confidence in the market nowadays, because if you look at what's happening with the global economy at the moment, there's currently something big at play, and the US trying to offload its $38 trillion debt into the global economy. Well, this is happening. We're going to see certain effects come as a result of that. So by them trying to do that, they're lowering the interest rates and then basically flooding the market with the US dollar, reducing the value of the US dollar in the process. So how are clients going to hedge against that? Your only solution is to invest in assets, whether that being, of course, real estate or gold or equities. But real estate is the most stable one of all three throughout history, and it's the only one that really generates income and is more stable.
A lot of people have their eyes on gold at the moment now as an investment. So how would you compare real estate and gold in today's market?
I think gold is a very important part of any portfolio, but it should never constitute the bulk of your portfolio. It's a good hedge against inflation. It's a very good store of value. But again, it's not an income-generating asset. And you should be always seeking income-generating assets as an essential part of your portfolio. And this is what makes real estate an important part of any portfolio.
So let's assume you own a property and its particular market is not performing that well. You're still generating a good rental income. You're not at a loss unless you sell,
Yeah, exactly. It's exactly like buying stocks. You only materialize your loss when you actually sell it. So if the market does drop, our advice to our clients is that to wait until it recovers, and it always does, because also, like, historically, people look at the market and they say it's cyclical and it always drops. Well, also historically, and it's cyclical and it always recovers. And we've seen that the recovery is often much quicker than the drop, and it projects to new highs always. So again, I am really not concerned. And again, I think the main idea here is that people should start to have more long-term vision while investing in Dubai. Dubai is no longer a speculation kind of play where I can go in and make money quickly in 6 months to 1 year. If you need now a more long-term approach to investing in Dubai real estate, you need to understand how the city is growing, how the city is evolving, where the growth is happening, and to start from today to position yourself as part of that growth. Don't think Dubai where it is today. Think about where is Dubai going to be in the next 5 to 10 years. And this is where you should be positioning yourself.
I agree. I think what a lot of seasoned investors have learned in the past years is that to gain the most out of their investments here, you have to align yourself with the government's initiatives, In the past, Dubai was making very quick progressions. During COVID, we were one of the first countries to be back and fully operational. So maybe that enabled a lot of short-term plays. But, now we're looking at Vision 2040. We're looking beyond that. So you need to orient your investment strategy to align with that, because as we said earlier, 6 million people by 2040. Where will all these 6 million people live today and the way the city is? This is why we're extending outwards towards Abu Dhabi and areas like Dubai South and Maktoum Airport, Expo City. Even there's very interesting projects coming up between the border of Dubai and Abu Dhabi. These will be huge hotspots in the future.
Exactly. You know, I think people forget that Dubai is a very young city. You know, everything you've seen here it never existed 20 years ago. And already we're being compared to way more established markets like London, New York, LA, Miami, Geneva, Monaco. You know, these are markets that existed for hundreds of years. But we are not there yet in our cycle. We're at the beginning of our cycle, you know, and it's important to understand that. And again, have that long-term approach of the potential of the city. I see this, we're still far behind from the true potential of where the city can be, you know, but we're slowly getting there. And definitely the leadership here, they have all the right, you know, approach and vision and guidance in place to see that materialize.
For anyone watching from abroad, what do you say would be the best investment play today in the UAE market?
Look, like first of all, like we don't really adopt like a one size fits all approach. Like we prefer each individual case has the right strategy for it, and we always need to, you know, talk to the clients and understand first of all, you know, what they try to accomplish from their investments and make sure that we tailor the right solution for them. But in general, my advice would be always like look for scarcity, try to enter into future projects at the right stage, you know, at the right entry point. If you're looking at off-plan investments, make sure it's valued below its ready equivalent, not at the same price or higher, as we can see in certain areas today. And buy where supply is low, buy where you can predict the supply to a certain extent. And if you cannot measure, if you invest in an area where you cannot predict the supply, then it's a very risky investment, and then we advise against that.
But there are certain projects or certain propositions where the off-plan is a little bit more expensive or the same as the ready. So what do you think about these projects?
I think first of all, when you compare them, you have to compare the quality of both projects. You cannot just always compare in terms of pricing, because as we mentioned earlier as well, is that a lot of the projects and launches that we see today are coming at a quality and a standard and offering a level of amenities and lifestyle that we haven't seen before in the market, because simply there wasn't that much demand for that level. And that's when it becomes so a bit hard to compare with what's ready existing. So I guess you have to still look for fair value, but also understand that sometimes you are paying a little bit extra than your current average price in the area, but you're also getting a higher quality lifestyle and a higher quality, you know, finishes in your apartments, and a higher resale value as well, because that quality is in demand and is not available a lot in the market at the moment.
Mm-hmm. So after this entire discussion, do you see the bubble bursting?
It's a tough question to answer because nobody has a crystal ball. I feel that there is some resistance from people towards the current market. So they see it as it's high. They see that a correction is on the horizon. So so usually when the sentiment is that high, usually the market reacts, you know. But I think if a correction happens, it's gonna be very mild, and the recovery is gonna be very quick.
I think it's healthy for the market as well to, you know, to reset in some way or to open the doors for new buyers, or, you know, the segment that you spoke about earlier, which has been priced out. So in the bigger picture of the market, I also see it as a healthy thing.
Exactly. So our conclusion is, based on the reports you see online, is listen only to facts and figures. Don't listen to opinion. Understand where the supply is coming and whether it affects you or not.
So I think when discussing the market, the term market is very broad and can constitute a lot of things. We have to break it down into communities and areas, because each area has its own dynamics, has its own supply-demand factors. For example, if one of my clients were to purchase a villa in Dubai Hills, their investment is protected from the oversupply of apartments that are coming in, or the supposed oversupply of apartments coming in different areas. Just this year in quarter three, 80% of the transactions were between 1 to 3 million dirhams, which we can derive that 80% of the supply for quarter three was apartments and smaller townhouses, you would say. So you have to split the market. You have to look at each area as its own unit and look at the factors affecting just that area. So in conclusion, don't take these reports at face value. The data is out there and accessible to everyone. You can do your own research and your own due diligence, and you can understand what's behind this data. So the smart play in today's market is to understand the cycle and not to fear it. Looking forward to discussing more topics like this in the next episodes.